What's up, everybody? Today we're going to take a look at the latest data on the housing market and see what the professional insiders are saying about an impending correction or a possible crash. We have some articles from Fortune, the Washinton Post, and Redfin that came out last week, and I think between the three of them, you'll get a lot of value out of this video if you're wondering what's happening right now in the housing market. So let's just dive right in. Last week, Mark Zandi, the chief economist at Moody's Analytics, told Fortune magazine that the US has officially gone from a housing boom into a housing correction, in response to data that shows that the US housing market is cooling down. US Census figures released last week said sales of new single-family homes in April of 2022 fell for the fourth month in a row and were 16.6% below the March rate. This is interesting to note because the data taken from new construction is taken from the time of writing the contract, so it's more recent, as opposed to the data taken from resale homes, which is taken from the time the house closes, so there's a 30 to 60 day lag. Other indications that the market is turning are mortgage applications and pending sales are also down, and a new report by Redfin revealed that almost 1 in 5, 19.1% of home sellers have been reducing the price on their homes for the week ending May 22nd. This is the highest level since October of 2019. Redfin reported that the typical time that a house is active on the market, the amount of homes going under contract within 1 week, and the amount of homes sold above list price have all plateaued. Mortgage purchase applications were in a level on par with June of 2020, which we know was when we were right coming out of shutdown, but still very confused about what was going to happen with the pandemic and how it would reflect on the housing market. So those numbers are a bit shocking. And the Redfin Homebuyer Demand Index, which takes into account the number of buyers that are asking for home tours or writing offers on houses, posted its largest decline since April of 2020. Daryl, Fairweather, the chief economist for Redfin, says the picture of a softening housing market is becoming more clear, especially to home sellers who are increasingly turning to price drops as buyers become more cost conscious under higher mortgage interest rates. She goes on to say, for now, mortgage rates have stabilized, and I expect prices to do the same. This will remove some uncertainty for buyers. That means as long as a home is priced conservatively, it still has a good chance of selling quickly. And I have to say, I agree with her. Even in today's market, right now in the middle of June of 2022, if a house is priced right, meaning priced like you would price it in a normal market, not at the last escalated price of a house that went way over, and it's in really good condition, because I really do think buyers want to just move into houses these days, it will still sell very quickly in multiple offers and get escalated way above the asking price. I really do see that even today with the market starting to slow down. Zandi, on the other hand, told Fortune magazine in terms of home sales, they're falling sharply. Housing demand is coming down fast. Home price growth will go flat here pretty quickly. We will see price decline in a significant number of markets. He went on to predict that home price growth will slow down to 0 by this time next year, as I reported to you in one of my last videos. Redfin CEO Kelman was asked where he thought the market was going to go on CNBC last week. Take a look.
And you're smiling even though it looks like the housing market is slowing. Tell me, Glenn, in 6 months, is the market going to be better or worse?
Probably the same. Rates
Why?
are probably going to 6%. Inventory is increasing. Sales volume will be somewhat fine, but prices are going to soften.
So prices will soften, so therefore you're going to make it more affordable, basically.
So basically, Kelman's saying that he thinks the market's going to soften and it will make housing more affordable. Fortune also asked Enrique Martínez-García, a senior research economist at the Dallas Fed, what he thought was going to happen with the housing market. Said, it's critical for the housing market to slow down. Take a look at this graph provided by Fortune magazine and the Dallas Fed. In the first quarter of 2022, the house price to income ratio rose to 95.97, the highest reading since the fourth quarter of 2004. It's still ways off from the 102.64 peak of the housing bubble in 2006, but historically speaking, we've moved into a period where home prices are nearing the limits of what incomes can afford. The last time this happened, home prices eventually snapped back. Martinez-Garcia told Fortune, "If this housing boom goes unchecked, things could get worse." That said, the continued disparity between housing demand and housing supply makes it unlikely that home prices will drop anytime soon. In actuality, Martinez-Garcia told Fortune he expects home prices in nominal and in real terms to notch a slight uptick in the next 12 months. So where does that leave today's buyer? If you listen to the Washington Post, they're going to tell you to wait a few weeks. This article came out May 31st. It's titled, "Ready to buy a house? Just wait a few weeks." In this article, Sen writes, "The housing market has turned in the past few weeks. We're probably looking at a cooling off period rather than something nastier, but both possibilities lead to the same conclusion for would-be homebuyers. Be patient." He goes on to say, "It makes more sense to wait and see how much the market will loosen rather than rushing in now at the first sign of improvement. Buying conditions are likely to be more favorable in a month or two than they are today." The Post cites 3 reasons why you should wait. The first is that we're exiting the seasonally strongest period of the year, and this is true. At least where I am, the spring market is by far our strongest market out of all 4 seasons. So I understand that. The second is that this is the first time since the pandemic that the market is softening. I also agree with this. I mean, come on, with the dramatic increase of interest rates over the past couple months, for sure it's causing the market to soften. I think we can all agree on that. I also have to say, here in the DC area, it really is house by house, neighborhood by neighborhood to see which houses are still going way over asking and which houses are having a price reduction. The third reason is that with the overall economy showing signs of weakness, longer-term interest rates have actually been declining in recent weeks, which is just starting to show up in mortgage rates. This is true. Interest rates did dip a little bit last week, and I think we're going to continue to see that. They're going to go up and they're going to come down. If the economy continues to deteriorate, mortgage rates could go down again to 5% or maybe even lower. But you never know. If inflation continues, they will continue to go up. If you ask Glenn Kelman, the CEO of Redfin, he says,
Is now the time to buy? I mean, if sellers are freaking out, if you're opportunistic, maybe now's the time to take advantage of that before rates really go to 6%.
I think so. Obviously, I'm bound to feel that way because I'm a real estate broker, but the honest truth is if you're going to stay in a house for 5 years, you're going to do just fine in this market and you're probably going to get yourself a good deal. If you plan on flipping the property or you're trying to make money as an investor, I think that proposition has gotten more dicey.
I tend to agree, although I've been saying 5 to 7 years. If you can afford a house and you're comfortable with the monthly payments and you're planning on staying a while, I think buying a house for you and your family is a great investment. You don't have to compete with rising rents, and you can start to build equity in your own home. But what do you think? I do want to know. Comment below. I always like to end with some recent graphs showing today's data. I picked out a few that I find the most interesting. So take a look at some of Redfin's most recent graphs showing today's data. The first one shows the median home sales price was up 16% year over year to a record $400,000. These are national numbers. Next, we have new listings of homes for sale were down 0.9% from a year earlier. This graph shows that homes that sold were on the market for a record low median of 15 days, down from 19 days a year earlier. So they're still selling faster than ever. A record 57% of homes sold above list price, up from 50% a year earlier on this graph. And this one I think you're going to find the most interesting. On average, 4.8% of homes for sale each week had a price drop. Overall, 19.1% dropped their price in the past 4 weeks, up from 13% a month earlier and 9.8% a year earlier. This was the highest share since October of 2019. So a clear indication of the housing market cooling down. The last graph I'm going to show you today, the average sale to list price ratio, which measures how close homes are selling to their asking price, was flat at an all-time high of 102.8%. In other words, the average home sold for 2.8% higher than the asking price. This was up from 101.6% a year earlier. Although I have to say, here in the DC, Maryland area, if the houses are going above list price, they are going much higher than 2.8% above the list price, at least today in June of 2022. So let me know what's happening in your neck of the woods. Are you seeing more price reductions? Are you still seeing multiple offers and houses going way over? I do want to know. And when you make a comment, obviously tell me where you're coming from. If you did get some value out of this video, and I hope you did because it's a lot of work making them, please consider smashing that like button, subscribing to our channel, and sharing with a friend. It helps us with the YouTube algorithm and motivates us to make more videos. And if you're thinking of moving to Maryland, DC, or Virginia, yes, we just got our Virginia license, just send us an email, we'll set up a Zoom, and we'll get you started. For more of my housing market videos, just check out this next one. Thanks for watching. Bye.